Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. So I'll have plenty more to talk about as this week goes on. It is the unofficial kickoff to earnings season. This week is going to be absolutely slammed. Uh, Unfortunately, it kind of starts off a little bit slower. Today's a bank holiday. Uh, it's not a national holiday, so the markets are still open, but the bond markets are closed. So typically that leads to a little bit lower volumes and a little bit quieter trading, which is what we're seeing today. So kind of the calm before the storm. Um, but like I said, plenty to plenty to do like these next few days, next few weeks. So I'll have a lot more earnings to talk about. But I just wanted to use today's video as just an opportunity to kind of talk about just something interesting, unusual, and actually pretty important. So it's kind of knowing what you're paying for, right? Like knowing your option pricing, what's priced into certain contracts, right? And spiders are just one of, I'm sure I can pinpoint many, but this was just something that we were talking about on Friday in the VTF, and it's not just this one scenario. I mean, like these types of patterns play out a lot, and what you'll notice is that because we are seeing more and more stocks, ETFs trade with these weekly contracts. Now you're starting to see even like more aggressive expiration. So you have midweek. So spiders, whether or not you're familiar, they have Wednesday expiration and Monday expiration. Okay, and what's great about that is that basically you don't have to really pay a whole lot of time premium, right? But at the same time, um, you are trading like these ultra short term contracts, so the implied volatility is most likely going to be higher for certain instances, right? And what's really interesting is that you can see because of these really short term contracts, you can see like the pricing structure a lot better, right? And what you'll notice is that going into the weekend, especially like just recently because we have all these trade headlines kind of circling, is that the spider straddle going into this week, so October 18th expiration, was pricing in. So this is the week one that expires on Friday. Was pricing in about 5 points. All right. So when we were talking about it in the afternoon, it was about 5 points. Now the like I said, like they have Monday expiration now. So like the spider straddle that was expiring today, so it'll expire after the close today. So literally only one session to trade. Those were pricing in about 3 points. Okay. So you had the straddle, which was priced in 5 for 5 days, and then you had the Monday expiration, which was priced in three. So basically, what that said to you was is that traders were anticipating a very sharp gap by Monday, or at least a large move by Monday's close, right? Because essentially 60% of the premium, so 60% of the implied premium or implied volatility for that weekly October 18th contract was built into Monday. All right. And what I find is that if you're really focused on like these very short term contracts, right, like the weeklies, is that if you're planning on taking these things from Friday and carrying them over the weekend into Monday, really what you're betting on, for the most part, and a lot of times, is a significant gap on Monday. And if you don't get a significant gap on Monday, which we didn't have a significant gap today, is that you're going to see like a monster implied volatility crush on these really short term options. So trading from Friday into Monday has its like own scenarios, right? Own set of risks that you really need to take into account. So like today, so let me show you what I mean by like these options, right? So again, not exactly 3 points, but kind of in the ballpark. So like say like they might have gone down to like 285 to 290, but what you can see just looking at it like quickly is right the 296 straddle, right? It's down to about 65 cents. So it's absolutely clobbered, right? Because there hasn't been a significant move, and those options are just losing that implied volatility, right? Because like there's basically no time value, you only have one day. Now looking at the October 18th, it's like yes, they've gotten hit too, so they're down to 3.5, give or take, right? But at the same time, now you have 4 sessions left, and we're in the heart of earnings season. So basically, like going into the weekend, you had right the Mondays were worth about Monday's expiration was priced in at about 60% of the overall applied volatility for the week, and now these have lost a huge chunk of their premium, and now you have the 296 that expires Friday at like 3.5. So what we were talking about Friday, and like kind of like a scenario that this presents with like these really short term contracts is looking at like diagonal, so calendar spreads, right? So basically, if you don't think that there could be a significant gap or a significant move on that Monday, what you could look at is possibly selling Monday and then buying Friday, right? Especially like a setup like we had this week, where a lot of like the trade headline news came out Friday, right? So they're assuming there wasn't a huge gap Monday, then you basically had the opportunity to get 4 days for only 2 points. So you had, after Monday's expiration, you had Tuesday, Wednesday, Thursday, Friday through the heart of earnings season for only two SPY points, right? So that presents like a scenario where you could do like a calendar spread. Okay, so like this is one of those trades where calendars are kind of interesting, a little bit more of a, it's not a complex strategy, but it's a little bit further down the line than just like a regular call, regular put spread, call spread, right? So you're selling Monday and you're buying Friday. So Monday you see a significant crush in the premium, and Friday, right, definitely got hit as well, but it's still trading for 3.5. So right now, that went out, say, for about 2 points. So like the net debit of that trade would have been about 2 points on Friday. And right now you could close it out even if you don't want to hold for the next 4 days for just about three. So about a 50% move, really without even having to do a whole lot, right? It's just taking it over the weekend. And if there's not a big move, then you see like that implied volatility crush, right? But so in addition to like the idea of like the trade and how to approach it, I just wanted to like point that out because people that really like focus on these very short term contracts, these weekly contracts, it's just something that you always need to consider if you're planning on buying something on Friday to hold through the weekend, right? Because a lot of like these short term contracts have a pretty significant like built in implied volatility just for each session, or sometimes over the weekend, right? Especially if we have like a crazy move on a Friday and they're very headline driven, right? So you really need to be aware of what you're paying for, and how that's going to impact, so say like the Monday comes and there's not a big move, how is that going to impact your trade, right? And sometimes, in my opinion, it might be smarter just to wait until Monday if you're really not expecting like a huge gap. All right. So this is just something, it's at the top of my mind because we were talking about it on Friday, but it's also just like a really good lesson because obviously options trading has like different dynamics than just equities. So there's things you need to like factor in, which you wouldn't, you might not have to with equities or stocks, right? So and this is one, just kind of like an interesting pricing dynamics, pricing scenarios, and it creates like different trade setups too. So a lot going on, but thought it was interesting, so I wanted to talk about it. If you have any questions, because I know that this might be a little bit more complex or a little bit more confusing, please reach out. I could help walk you through it a little bit more in depth. If you do like these videos, or if you like any of these videos, or you're looking for maybe some trade ideas, please follow up with the link in the description of the video for more options, for more information on options in play. All right. Hope you guys have a wonderful night. Best of luck if you're trading anything, and I will talk to you all tomorrow when earnings season really gets going in earnest. All right. So have a good one.